Well, hey, what's up? Welcome back, investors, and even you with the interesting face. I'm Russ, and in April, I bought 8 stocks, sold 3 of them, and received 13 dividend checks worth about $850. You know, your participation and engagement are what make this community so freaking great. So if you would, in the comments below, why don't you go ahead and share a stock that you think nobody is talking about, but they should be. And our commitment to revealing sometimes uncomfortable truths that others will shy away from, I think, are what sets us apart. So if you stick around, you'll see exactly what I'm talking about. And our portfolios, which we proudly share on the channel, make up a small portion of our entire net worth. The bulk of it is spread across 3 mutual funds in our 401k, and I'm going to show you the names of exactly which 3 that those are. So you'll have to stick around for that too. So we'll start it off with all the dividends received. Altria, ticker MO, paid us $147. Next, Leggett & Platt, ticker LEG. Ugh, what a mess. They just cut that quarterly dividend from 46 cents a share all the way down to 5 cents, about a 90% cut on that dividend. Yucky nasty. This is one of the lessons investing in a cyclical business. It got the best of them, and they lost their dividend king crown, which means that they've raised their dividend for 50 consecutive years. All the flags were there, all the red flags, the warning signs, the flashing lights. I continue to ignore them. Big mistake. So Leggett & Platt, we will be out of them by then, but there is at least some talk that they're going to look into paying a variable dividend, buying back shares, and paying down debt with some of the savings from the reduced dividend. PepsiCo, ticker PEP, paid us $126.50. Lockheed Martin, ticker LMT, paid $31.50. BDC, Ares Capital, ticker ARCC, paid us $194.40. Diageo, ticker DEO, which will be our last dividend payment from them because we sold the few shares that we had, as you'll see in a minute, but they paid us $6.48. And yeah, I tried those shares on for size. They are the manufacturers and the owners of a brand that is one of my favorite alcoholic beverages, Guinness. Innovative Industrial Properties, ticker IIPR, paid us $18.20. Simon Property Group, ticker SPG, paid $19.50. Toronto Dominion Bank, ticker TD, paid $111.20. And as of this recording, I read some news that the DOJ, the Department of Justice, is going to be investigating them for some alleged ties, something to do with laundering drug money cross-border. So I'm hoping this turns out to be much ado about nothing, but here we go. Well, we received $51.40 from the monthly dividend company Realty Income, ticker O, and also more monthly dividends from Main Street Capital, ticker MAIN, paid us $36. And what are we doing with those monthly dividends? Well, we're buying more Agree Realty, ticker ADC, which paid us $7.66. And then lastly, Vici Properties, ticker VICI, paid us $54.37 for a grand tiddly total of $850.21 in dividends in the month of April. And again, just go to DapperDividends.com, click the link below if you want to see these portfolios. And now what we bought, 18 shares of Johnson & Johnson, ticker JNJ, at an average price of $150.79. That added $89.28 of PADI, or projected annual dividend income. 3 shares of SCHD at $77.05 added $8.01 of PADI. 15 shares of SCHG, the Schwab US Large Cap Growth ETF, $89.02, the average price we paid on those, gave us a little old $4.65. But this, you're not buying it for the dividend, folks. We bought 20 more shares of Vici Properties, ticker VICI, at an average cost of $28.45. That is in the self-directed IRA, tax advantage, so $33.20 of PADI added on those. And then I told you, we're buying more Agree Realty, so we bought 28 shares in the month of April for an average cost of $56.41. which gave us 84 big old dollars of patty. And TD, Toronto Dominion Bank, we bought 7 shares at $57.90 average, gave us $21.07 of annual added dividend income. And then before the drop, we had been dribbling and drabbling shares of Starbucks in their ticker SBUX, 2 shares at $89.71. And my goodness, what a difference a few weeks makes. And we did a bunch more buying Starbucks, but that's going to be for a future video. But that gave us $4.56 of patty on those 2 shares. And then lastly, a non-dividend stock. We bought 35 shares of Harrow Incorporated, ticker HROW, with an average cost of $11.12. This one, hold on to your hats. It's going to feel a bit speculative, because what I think is going to happen in the future has not happened yet, no guarantee of it, and the market is going to be pretty violent with this one until it does. But I'm a big fan of their CEO, Mark Baum, so I'm putting my money, I'm betting on the jockey, and I also like the horse as well. Told you we sold those 4 shares of Diageo with an average cost of $148.01. And it's been last trading. I saw it in the high $130 range. So that cost us $16.36 of dividend income annually. Altria, we sold these out of the self-directed IRA, ticker MO, 10 shares, average $41.81. We lost $39.20 of patty there. And honestly, a lot of people buy this for the income, but my wife and I decided to slowly start moving out of Altria as an individual holding because we've lost family members because of smoking, and we feel that a business like Altria, yes, their product harms someone along the value chain, and unfortunately, it's usually the end user or the customer. And then also we feel that it's two-pronged, that their cigarette sales obviously have been declining for many years and their revenues are flattening out. Cigarettes make up a massive chunk of their sales, so we don't think that the next generation products are going to be able to fill that void left by Altria and their cigarette sales. Sold 11 shares of AbbVie, ticker ABBV, at $164.80. Cost us $68.20 of patty, but we just wanted to redeploy that money into more of the REITs, which we think, because of the interest rate situation, are at a really good buying opportunity and one day are going to come back up. We just don't know when that's going to be. So all in all, in the month of April, we had a net gain of $121.01 of patty. So really quickly, here's a look at the portfolio and the holdings. Currently, the things are going to be changing this year because we're starting to look at just exiting out of some of the lower quality businesses that we've been holding for the yield. It's really been dragging the performance down. We're going to be making some moves, but as of right now, the yield on cost, 4.88%. And we're going to sort this one by percent of income, so we'll move through really quickly. If you want to look at any of these Simply Safe dividend numbers, feel free to pause the video or zoom in, whatever you got to do. But Ares Capital, 405 shares, haven't really been adding much of them. As the interest rates have gone up, that's been very favorable to the BDCs like Ares Capital, Main Street Capital, so they have increased in price and they're both at almost 52-week highs. Nexstar Media Group, ticker NXST, 107 shares. One we're holding on to. It's a rather large position, but we think that good things are coming for them. And hey, the market may not have realized it yet, or I could be completely wrong here. But hey, time reveals truth, right? So we'll get to see. Realty Income, Johnson & Johnson, PepsiCo, we've had those 100 shares for a long time with an average cost of $150.37, but that's not including the dividends received and some of the options we've sold on those. Altria, 127 shares. We're winding our way down out of those eventually. Toronto Dominion, 157. Main Street Capital, 150. SCHD up to 158 shares of that. AT&T, this is one that we should just exit out of. I don't want to be in this business anymore. We've shared the reasons many times. But there is a saying that every day you decide not to sell a stock, you choose to buy it. Could be some truth to that. So AT&T, someday we will eventually be out. We're down 32.5% on those. Vici Properties, 152 shares. We're going to be at 200 someday. EPD, hoping that comes back down to the 26 range. We'd like to add more. Agree Realty at 62. ExxonMobil, 44 shares. So those we haven't added to in a long time, and you can see our cost per share, $45. We've had a gain of 157% on ExxonMobil. We got Prudential 32 shares, AbbVie 25 shares. We're up on those. Lockheed Martin, we're up on those nicely. Chevron, again, up 89%, not as much as Exxon, but we haven't added any of those, and we're still thinking of what we want to do, but those are in the self-directed IRA. Very well may just sell some of those, put them into REITs. We'll decide that later. Starbucks up to 40 shares. Simon Property Group, 10 shares. Again, some of these that we have 10 shares don't really add too much. Likely these are going to get consolidated into other positions. LyondellBasell, we're thinking of adding more to that. Looking at that one. Innovative Industrial Properties, likely going to sell that one eventually, but I'm playing a game where we got back to even on the 40 some shares we had. These last ones have a cost per share of $171. So we'll see if they can ride this green wave that's coming with some of the news out of Washington, D.C., that they may lower the drug schedule on it so marijuana won't be the same as, I don't know, crystal meth and heroin and cocaine. McDonald's 10 shares. There's those 100 shares of Leggett & Platt, down 61% in those. And we're looking for about $15 a share to exit. I think we might get back up there. SCHG, there you go, 15 shares. Harrow Incorporated does not pay a dividend. And we have about $465 of cash just laying around. Now, here's the uncomfortable truth. Going to get real with you. Going to share this. Across 4 accounts that we share. Check this out. This is from Schwab. This shows us the rate of return. I hit max. So it's going to lump in everything since we've been on the platform, which is December 3rd, 2019. 28.60% return, as you can see here. Hey, sounds pretty good, right? Now, again, there's been a lot of mistakes in this. Penny stocks, investing in things like Aurora Cannabis that we lost over $1,500 in. A lot of dumb stuff going on. That's my tuition of the market. These have been learnings. These have been lessons. But 28.6%. Might sound pretty good, right? Well, check this out. If you were to invest in VOO, which is the Vanguard S&P 500, look at this, 73.05% return, where I've had 28.6 from December 2019. Again, this is not taxes involved. This is not reinvested dividends, total return, anything like that. Just cumulative rate of return. So all you have to know is buying something like a VOO or a VTI. You're betting on America that they're going to remain one of the worldwide global leaders. And you don't need to know how to read financial statements, any accounting jargon. You don't need to know very much about the stock market other than how to have money go in and automatically just buy some of those ETFs that track the broad index and have a very low fee. But again, a lot of us don't want to beat the index. That's not our goal. But still, I'd be lying if I didn't say, well, I probably could have just bought VOO and done nothing, and I would be way further ahead than where I'm at now. But we're going to take this opportunity to instead shift looking for quality businesses and not focusing so much on yield. And as for the bulk of our retirement funds, I'm just going to throw up. Well, I'm not going to throw up. I'm going to put up on the screen. Number 1 is the Vanguard Value Index Fund, ticker VVIAX. Number 2 is the Dimensional Funds US Large Company Portfolio, DFUSX, which is essentially the S&P 500. And then lastly, we have a small portion in Fidelity's Mid Cap Index Fund, ticker FSMDX. So I started this journey in 2019 as a dividend investor focusing on dividend income. I've made a lot of mistakes. The evolution continues to roll on. My thinking is changing. My mindset is changing. I'm sharing it with you, and I will share the top 3 lessons or so in a really soon upcoming video. Hey, he don't speak so good, yeah? But you know who does speak good? In this floating little box next to my head, we talked with Fabio Marciano, who is an author and a real live millionaire next door. He has some nuggets of wisdom for you, and if you click on this floating little box next to my head, we'll tell you all about it. He'll tell you all about it there.